Which is the best dividend stock to buy? Is it IBM or is it Intel? I'm going to answer that question in this video, comparing these two dividend stocks across four financial metrics. So let's begin. The first thing I'm going to look at is the dividend yield. They're very similar here between these two dividend stocks. IBM offers a dividend yield of 3.92%. Intel offers investors a dividend yield of 3.52%. So if you're looking only at dividend yield to make a decision, they're really close. So you can't really say, oh yeah, for sure IBM is so much better, I'm going to go with IBM. That's not the case here. So the next thing I wanted to look at is annual year-over-year revenue growth. And I'm looking back 10 years comparing Intel and IBM. And for the better part of the decade, Intel had better revenue growth than IBM. Although in the last year or two, IBM surpassed Intel because of the headwinds Intel is facing. Now, the reason for these headwinds for Intel is twofold. One of them being longer term, the other one being shorter term. The longer term headwind for Intel is that a lot of people bought computers and laptops in 2020 and 2021 when they had to work and learn from home. And that's creating a pocket because now those people that bought computers in 2020 and 2021, they're not going to need to buy another one until 2025, 2026. So it pulled forward a lot of demand for computers and laptops, and that created a gap. And now Intel is experiencing a headwind because people aren't buying computers and laptops year over year. They experienced a big decline in sales in that segment. The second segment is that one is more longer term, right? 3 or 4 years until it recovers. The more shorter term one is in its data processing segment. They also experienced a decrease in that segment. That one is also common to IBM. The headwind that is not the data center, but the enterprise-wide slowdown in spending. Businesses around the world are afraid that there's going to be a major economic slowdown. And so they're preparing for that. They're cutting costs, saving money, putting away money, stopping any kind of expense that they have control over, and waiting, seeing how the economy adapts as economies reopen, as the Federal Reserve has raised interest rates significantly. So that headwind is more shorter term, right? Because as soon as businesses realize where the economy is going to go, they can prepare and come out of that, right? So if we do go into a recession in the second or third quarter of this year, economists estimate that it's going to be a shorter term recession. It's not going to be a long lasting recession. And then businesses can come out of that and return to growth. So that headwind, the second headwind, is shorter term, a couple of quarters in nature. The next thing I wanted to look at is operating profit margin over the trailing 12 months. And again, Intel had the lead in this for the most part of the last decade, and it was improving, right? Moving up while IBM was moving downward. That is until the most recent year, right? Where it really collapsed as a result of those headwinds I mentioned earlier. So again, for the short term, this is going to persist. But if you look at structurally, if you look at the business longer term, Intel delivers better revenue growth at better and expanding profit margins, and the complexity of what Intel creates, right? Those computer chips, it's difficult to replicate. They have, one competitor in AMD really, and it's difficult for anyone else to jump in and replicate those kinds of products. So they're able to sell them at premium prices. Finally, the last thing I'm going to compare these two dividend stocks on is valuation. And I chose to use the forward price to earnings ratio. And according to this metric, Intel is a little more expensive than IBM, trading at a forward PE of 16.4 compared to a forward PE of 12.7 for IBM. But if I had to choose one of these two dividend stocks to buy today, all right, I would choose Intel. I would choose Intel for its longer term better performance that it's proven over the last decade. It's structurally a better company, better growth, better profit margins than IBM, even though in the near term it does face headwinds. But those headwinds have caused the stock price to come down considerably off its high, and you can view that as an opportunity here to jump into Intel stock. So I would choose Intel if I had to choose between one of these two dividend stocks to buy right now. All right, that's all I've got for this video. Thank you so much for watching. I really appreciate it. I hope I'll see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.